Back, well, we told you that we are going to be discussing an issue which is now exercising the public, the parliament, the courts, the investigative agencies. It is the most important topic to discuss. The Vijay Mallya mess has opened up the public eyes to the extent of bad loans in the system and questions whether the laws are not adequate or bankers are themselves not going after borrowers who are defaulting or be unable to make their interest or principal payments. We have three veterans from the system joining us. Pratip Chaudhuri, former chairman of State Bank of India, D.K. Mittal, former Financial Services Secretary, and Mr. Charan Singh, Executive Director of UCO Bank, joining us. Well, Mr. Charan Singh, let me start with you, since you're the man in the thick of it right now. We understand that bankers at the moment, led by SBI, are grilling several borrowers to ask them to pay quickly whatever dues there are, to sell off non-core assets. Can you give us some update on what this meeting is all about?
Yeah, of course, this move is going on, but I don't know how far it will be successful, because these borrowers, they don't have any cash flow, and selling of assets is also not a very easy job. So we are working on that. Means SBI is taking a lead in that direction, and many consortium meetings are held for deciding on what to do with these borrowers. Let's hope that some results will come. At least we should be able to sell some of the properties which are not in use, or some of the assets which can be sold off.
Yeah. I understand that most of them are steel companies, and there aren't so many steel buyers on the scene.
What's that? I could not get you. Please.
We understand that most of the companies who were being met, whose promoters, the bankers were meeting, are steel companies. I mean, we had that list of, Bhushan, SR, as well as the smaller steel companies, Visa, and companies like that. There aren't so many buyers for steel today, since there's such a downturn. So is the intention to sell non-core assets, to sell, say, buildings, office space, other assets?
Yeah, in fact, that's true that this steel companies, because they are in problem, the sector itself is in a problem, so the buyers are not there. Even the investors are not there. So I think we have gone for SDR also in few cases, but that is also not materializing because of not getting the investors or the buyers. So the only alternative is now I think left is that we have to continue either with the existing management, and of course sell some of their non-core assets or some of their non-core activities, or some of their personal assets, and bring some liquidity in the company. So that's the only alternative left. Or if, I don't know whether how far it will be okay, but I think now, because the investors in this scenario will not come forward to invest in such companies. So in these cases, I think for implementation of the SDR, we have to look for some market for developing some market for the professionals who can run these companies. The bankers can invest, and then we can create some mechanism or some infrastructure who can scout for the management who can run these companies.
Okay. Sure.
And the bankers, of course, can put in their money behind it.
Okay, of course, and there's the question of whether the collateral as well as the assets are going to be even sufficient to cover the kind of loan. But Mr. Chaudhuri, let me come to you. Today we feel a lot of angst and ire that why didn't the banks act on the Kingfisher Airlines loan recovery a lot earlier? The loan was restructured back in 2010, and it's 5 and 6 years counting, and we've still not managed to get the money back. So two-part question. There's so many stressed companies today. Has the system now improved? Are we now a lot more alert to prevent another Kingfisher from happening to the current indebted companies? And secondly, do you see another Kingfisher Airlines coming? Because there's so many companies which are saddled with very high debt. JP Associates has a debt of 75,000 crore rupees. GMR Infrastructure, Adani, all of them have debt in excess of 40 to 50,000 crore rupees.
See, on Kingfisher, it is not right for me to speak on television because the matter is sub judice. But basically look at this, that when you call up a loan, you are putting an end to the activity. So therefore, whatever chances are there of it coming back to health will not happen. It is like, mercy killing. So it cannot come back. So that is why banks are a little circumspect before applying that extreme medicine. And secondly, under the lender's liability, you cannot call up a loan till the borrower is serving the interest and the principal. So you can only call up a loan and call up the facility when the account becomes non-performing. They may be making losses. That today so many respected companies are making losses, but that is not an adequate ground to call up the loan. So companies try to fight this problem by taking trade credit or other liquidity measures, and only when the situation is that it is irretrievable, it is like a patient being taken for operation.
Yep.
Till there is some hope that the patient can be cured with medicine, many people don't go in for the operation. Operation is the last resort, or I would say late resort.
Okay.
So that is how it works, because if you call up the loan, the whole thing collapses, and for a stalled business, you get much lower valuation.
No, Mr.
And for
Mr.
example,
Chaudhary,
if you see Arvind
Mr. Chaudhary, I take your point, sir.
Went through a bad patch.
Yes. No, I take your point entirely, sir, that you don't want to kill a business unless you're absolutely sure it cannot be revived. But the point is, in all these restructuring cases...
Not that. Absolutely. That means when there is... Because you have to look at the worst of the two options. If you allow the unit, or if you force the unit to close, what you can possibly recover, and what you can possibly recover by giving some, doses of oxygen.
Yeah,
So this is a choice between the two.
I take your point, Mr. Chaudhary.
And it's a real-time choice.
I know. I agree it's a real-time choice. But my point is, the entire list is now in the public domain. I mean, there are several editions of Credit Suisse giving you the house of debt data from 2012 onwards. We have, see, for instance, Jaiprakash, as Rima alluded to, 63,000 crores gross debt in FY13, 72,000 or 73,000 gross debt in FY14, and 75,000 gross debt in FY15. I mean, systematically, that is one. I can go on. Adani Power, 41,000 became 44,000 crore, became 45,000.
Let us talk of... You can't jump and you can't just spit and run. No.
Let me finish my question.
You can't just spit and run. Let us talk of
let me finish my question.
You are shifting ground.
My question is... My question is, in a zillion cases, banks have given more so that the companies don't go under.
Please.
How much do you ensure that the promoters bring money? It appears that banks are doing much more to save than promoters are doing to save it.
True. No, promoters, if they're in a position, they bring. But if the promoters are not in a position to bring money, what do? You ask the unit to close down, in which case the option could be worse. It is like a hospital. If the patient does not have money to pay a huge bill, what do? You throw out the patient, or you try to have a less expensive?
Mr. Chaudhary, there are innumerable instances of promoters living in style, but companies going sick. It's very obvious from their visual living styles, whether it is the Ruya brothers or whether it is Malia, their actual style is not showing any reduction. It definitely gives the feeling that promoters have money.
That should be overall law, that if a promoter is under CDR, he cannot have an expensive car. He cannot have an expensive house. Under which law do I go and attach the house? You please tell me.
Okay, Mr.
Under
Mittal,
which act? And even
Mr.
today
Mittal,
many media...
Okay, let me get Mr. Mittal in, since he represented the arm of the law until recently. Mr. Mittal, is this the case, that banks don't have the wherewithal, the legal means to attack a promoter, and they have to keep on giving loans simply to save an old loan?
I think there are very fundamental issues with the way lending has been made in India, and these are known to everybody. One of the fundamental issues is the leverage, which you very rightly raised. If my equity is not there and I keep on borrowing, where is my skin in the game? So this is a very fundamental issue. The names you gave, in all these cases, they had almost no skin in the game. And secondly, siphoning out the money. Now, this is something which is very, very much prevalent in India, and it is happening for quite some time. Not that banks are not aware of it. The problem with the banks is after they lent X amount of money and they declare it NPA, they have to take a hit on the balance sheet. And the tenures of the chairmen are limited, and nobody wants to take a hit during his tenure or her tenure. So everybody wants to shift the blame to the next one. This doesn't happen in case of SDFC when the CEO is there for 20 years. This doesn't happen easily in ICICI with the CEO is also for that long period. So that's a problem with the management side of the public sector banks.
Okay, well, Mr. Mittal, we
Now,
have...
in terms of the power being exercised by them, I think the powers are quite good enough. But the processes which are there with the DRT and the SARFAESI and the courts, they're quite cumbersome, and it is not easy to get all approvals from these authorities at a point of time to execute the process.
Okay. Well, we have to take a very quick break, sir, but we are continuing this discussion. We've been speaking with Mr. Pratip Chaudhuri, Mr. D.K. Mittal and Mr. Charan Singh, the Executive Director of UCO Bank, on whether bankers don't have the weapons or don't have the will to go after borrowers with aggression, especially in the shadows of the Kingfisher case. Mr. Chaudhuri, how can the situation be different then? Is it that banks should not allow themselves to be levered so much at all, that you all have a bigger stake in saving the asset than the promoter has? You know, having given the money, you become more dependent. So should we ensure that you
Please allow me to speak.
Yeah.
Please allow me to speak. You have gone with the rhetoric far too ahead. See, for example, the sectors which are in difficulty, power plants. Now, power has been supplied to the DISCOMs and DISCOMs don't pay. So what do? You disconnect their, you refuse to pay their wage bills, you refuse to pay their other bills, and the unit comes to a halt. We have seen that when the company stops production, you fetch a much worse value than if you allow it to somehow survive and go along, hoping that it would turn around. If you look at the last down cycle of steel, which happened in the late, in the previous century, 1999-2000. How did they come out of that difficulty? Because of better operations, better price realization later, and all the companies, including the very successful ones these days, and I would single out Steel Authority of India, which is public sector and which possibly has no such management issues as you speak. So that share price went down to 4 rupees. And the same plants, came back to life because when the cycle turned better. But today the situation is different. We have much more, open trade. So if the Russian currency depreciates from 57 to 76 in 1 month, you can expect a lot of steel coming and flooding the Indian markets. And the biggest problem industries are steel and power. And I think for power, the blame can be laid at the door of the DISCOMs alone. If you, for example, take the near Bombay, the Dabhol power plant, which they said that is being run by a rogue company, the rogue company was removed and it is run by 2 very blue chip public sector companies, NTPC and Gas Authority of India. But yet, the State Electricity Board refuses to honor the PPA, refuses to pay the fixed charges. Now, if the bank was to shut down the unit, I think the loss would be much more. But we are hoping that, things would improve and the Electricity Board may change its stance.
Mr. Chaudhuri,
so much of this has happened because of this.
No, I take your point.
And if you see the newspapers, they're...
Mr. Chaudhuri, I completely take your point that there is a global slowdown and that there are huge amount of problems with the way we run power sector. My point is, why are banks getting more attached to the asset than the promoter is? Mr. Mittal, can the situation be changed? One can understand in a situation like power, which is so completely ridden with governmental inconsistencies. But in, say, for instance, a situation like Kingfisher or in a whole host of other industries, even for that matter, steel. Okay, let's take the case of steel, which Mr. Chaudhuri is referring to. SR Steel in the previous downturn was an NPL and had to be restructured. SR Steel in the current downturn is also asking for more money and is an NPL, and numbers indicate that every year banks are giving more money, just perhaps that the previous money gets returned and the loan is not an NPL. Why can't banks pull the plug earlier? Why should they lend at all to someone who has already got a restructure and who has defaulted on OFCDs, on debentures, on floating rate notes? It was a very clear indication that several parties had been defaulted in the previous down cycle. Mr. Mittal, could at least some of these loans have been stopped, if not all of them?
Lataji, let me just give a preface what Mr. Chaudhuri has said. No, I would disagree that the banks were at freedom to lend to DISCOMs to meet their losses. They lent about 3 lakh crores. no country would have permitted that to happen is primarily because against a government guarantee, my provisioning requirement is zero. No, that doesn't happen. First, we funded the DISCOM losses. Then we funded the power projects which are supplying power to these DISCOMs, knowing fully well that these DISCOMs will not be able to pay. And now when they are becoming NPAs, we can't blame the DISCOMs. It is a total failure of the banking sector, whether the banks or the regulator together, they are responsible.
Mr. Mittal, this is going a little far. Do you think any of the banks can refuse to fund any of the DISCOMs? Will your political masters keep
100%.
quiet?
No,
You mean
this
today,
is a total
today
lie.
Mr. Charan Singh can stop funding all the DISCOMs that he has because in almost all cases the expenditure is more than the income. Can he stop? Politically, is that possible? Are not the politicians coming in the way?
100%.
Are they not to blame more?
No, Lataji, this is a total lie. Let me say use very strong words. There is no political pressure of this kind that you funded DISCOM. DISCOMs have been funded by banks merely because there was no credit expansion happening. And when the problem came, the same way they funded everybody. I mean, you keep on funding loss-making public sector enterprises, and at the end of the day, you come to the government that we have funded government. Who asked you to fund? Nobody refused it. So I think, but coming back to your main question, you see, I fully agree that at some stage, these assets, which are today bad assets, were in a position to be retrieved by the banking sector and to be handed over to a promoter who could have run them well. Okay. But each asset passes through a stage. Maybe many of these assets have passed a stage when this is not feasible at all. Okay. Because everything virtually will have to be written off.
Well,
and that's a big challenge.
Okay, well, I'm sorry we have run out of time, but we still have a lot of questions. I'm not very sure that the political system gave the bankers so much freedom at all. There was serious pressure in 2008 and 2009, and I'm sure on State Bank of India also, to give loans and to prop up so-called prop up the economy and produce a 9% growth rate. So I don't think the politicians and the government is so completely absolved of casting pressure on the bankers. Unfortunately, out of time, or I would have given Mr. Pratip Chaudhuri and Charan Singh one more last chance to speak against Mr. Mittal's stance as well. Wrapping up on Bazaar, Chartbusters next. Thank you, gentlemen.